but let's talk about a couple of earnings that came by. Transport Corporation of India reported a softish quarter. The stock is down about 11-12% from its highs already. So the question is how much of that is priced in, but more importantly, what's the outlook from here on as well? Vineet Agarwal, who's the managing director of the company, joining in now. Thanks a lot, Vineet, for joining in. Always a pleasure speaking with you. While, on an overall basis, we did see a 5% revenue growth. It was impacted by weakness that we saw in the Seaways division. Freight as well grew just about 2.5% itself. So what we want to understand from you is, as you stand at the cusp of, the end of the second quarter itself, what are your thoughts on what the entire year looks like for you in segments and the operational performance going forward?
Hi, Mangalam. Good to be here. It's been, the first quarter is usually the weakest quarter for us because, as you know, in the year end, people are pushing sales. They are also moving, building up a lot of inventory everywhere. So that creates a huge rush of business in the end of March. And subsequently, April, May, June are slightly weaker. Also, with the onset of early monsoons has also created a little bit of a backlog in some areas. Freight is, I think, at a nominal level. Last year, we grew quite aggressively, so it's coming off from a higher base. Shipping, we were expecting things to be a little slow from a margin perspective because last year was a great year. With all the global shipping market going at a high, it also helped us in the domestic shipping market. So clearly, it has had a little bit of an impact. But broadly speaking, the next 3 quarters, we are looking at good numbers. Several sectors are doing exceedingly well. For example, the automotive sector, and that is, you can see the results in our supply chain business. So I'm very positive that we'll be able to maintain the guidance of 10 to 15% on the top line and the similar on the bottom line.
All right, 10 to 15% on the top line and a similar number on the bottom line itself. For the first quarter, across your sectors, could you help us with what the volume breakup was and what was the realization impact?
Well, it's very difficult to give you volumes because we have such disparate divisions. Freight business doing a full truckload business, Seaways doing containers, and our supply chain business doing actually movement of automobiles for that matter. So we don't have a volume breakup per se, but broadly speaking, I think there is a positive growth in all volumes in all the sectors. One exceedingly good growth area has been multimodal logistics for us, which is use of rail logistics as much as possible, even for automotive movement. And we are moving close to 200 rakes a month now for various companies, not just in the automotive space, but otherwise as well. So volume breakup is a little difficult to give in our kind of a business.
Hi, good morning, Mr. Agarwal. What about the cold chain business? How did it perform in quarter one? I think last year you did close to around 80 crores. For this year, what's the target?
Last year, actually, we did slightly lower. We did about 60 odd crores. And
60 crores,
yeah, we are flat this quarter, but I see again tremendous growth. We've actually removed some contracts which were not looking very good. Some of the quick commerce companies where we saw that there was funding issues coming in. So we really dropped some of those contracts. But now we have some excellent ones, especially in the QSR space. The pharma chain is also becoming very, very susceptible to changes specifically because volumes need to now move through a cold chain system. And many companies are coming together to really build a cold chain system in the pharma space. So pharma looks very attractive from a cold chain business as well.
So last year you targeted 80 crores, ended up with 60 crores in revenue. What was the number that you did in the first quarter and what are you targeting for this year from the cold chain business?
So the first quarter, the number was about the same as the last quarter. I recollect, I think about 15 crores. And the forward, we are looking at about 80 to 90 crores this fiscal year.
All right, 80 to 90 crores. And the Seaways division, I remember you telling us, the sustainable margins out there is close to around 35% odd. I understand that there is weakness in the space, but when are you expected to, go back to those 35% sort of margins and improvement in the space? Is it the second half of this year? Are you seeing signs of improvement?
Actually, we are at higher than those numbers right now. So going down would mean that going down. So I do expect it to moderate, I would say, in the next few quarters. However, I think volumes will also come back because last year we had 3 ships that went for dry docks. We had only 1 ship this year, and that too in the first quarter. So we'll have all our ships available in all the 3 quarters for operations, which means that we should definitely drive some higher revenues and maybe try to maintain the margin structure we had last year.
Okay, all right. Could you tell us how does your revenue mix look like going ahead between freight, supply chain as well as seaways? As of now, I have that rough breakup. But going ahead, how do you see things shape up?
See, broadly, things are moving towards multimodal logistics more and more as we see, because that's not only cheaper for companies, but also it's green logistics. So we see a good traction, whether irrespective of the division, but definitely multimodal will be growing quite rapidly. So I think if I take a 5-year perspective, then maybe the 3 businesses would probably give a third each. If I take a shorter perspective, then maybe a little bit more towards freight and supply chain being equal. Supply chain has done quite well in the last quarter, especially because we've seen the automotive business really pick up aggressively. We are seeing some softness in the tractor side as well as in the two-wheeler side. But otherwise, all the four-wheelers is doing very well. Earth-moving equipment companies are doing very well. So I think those have really helped that business.
Right. And final question then, with a third of your revenues coming from all the 3 sectors, what would that do to your margins? Just trying to understand what the efficiencies for the company would be in terms of a blend. And do we see margins structurally move higher from this 10 to 12% band?
That's always the intent. I think with different types of businesses, which is the higher value-added businesses growing over the course of the next 4 or 5 years, certainly margin structure should change, and we do expect it to get better.
All right, Vineet, thank you for joining in and giving us the outlook. Wish you good luck for the remainder of this year and hope that the situation improves, not just for you, for the entire industry and the GDP as well. We're growing fast. Things can grow a lot faster as well. With that.